Hello, my name is Neil Jenkin and I'm a director with Barclays Wealth. In this video, I'll provide a brief introduction to foreign exchange, covering what is foreign exchange, how foreign exchange works, the factors that can affect foreign exchange rates, and how to make a foreign exchange transaction. So firstly, what is foreign exchange? Well, at the most basic level, foreign exchange, or FX for short, is changing one currency into another currency. For example, you hold US dollars but need euros, and so you sell your dollars to buy euros. Globally, the equivalent of $4 trillion are traded every day, making the global FX market of significant economic importance. There are a number of reasons why people might exchange currency, including to use when they're in another country when traveling, to make a significant purchase that has to be conducted in another currency, to invest internationally when products are in a currency different to their own currency, or perhaps to manage a portfolio of cash balances and other assets that are in a number of currencies. So secondly, how does FX actually work? Well, FX trading involves exchanging one currency for another at an agreed rate of exchange. In simple terms, if I hold euros and plan to make a purchase of goods or services in sterling, I will be selling euros and buying sterling. But how do I find out how many pounds sterling I will get for my euros? Well, this is known as the exchange rate, and as you would expect, the exchange rate will vary between different pairs of currencies. The exchange rate also changes regularly, and if we return to the example of selling euros and buying sterling, well, the financial press will quote an exchange rate for euros to sterling. This is often referred to as the interbank rate. FX providers will provide their clients with two rates, one for buying and one for selling. The difference between the buying and selling rate is because most FX providers build their commission into the rate of exchange they offer their clients rather than charging a separate fee. The rate of exchange you're offered will also depend on the size of the transaction. Typically, the larger the trade, the better the rate. So let's look at an example of how this works. Imagine you're planning to buy a property in the UK and the purchase price of the property is £250,000 sterling. You hold euros, so you need to buy £250,000 of sterling to complete the purchase. The interbank exchange rate is currently 1.1150. The FX provider offers you an exchange rate of 1.1250, which is the rate for buying sterling with euros. This means it would cost you €1, 12.5 cents to purchase £1 sterling. You accept this exchange rate and execute the deal, meaning your euro account would be debited with €281,250 and your sterling account credited with £250,000. The internationally recognised settlement period for foreign exchange is known as spot, which is transaction date plus 2 working days. Other settlement dates are available on request, and these can range from the same day up to months or even years in the future. So thirdly, what are the factors that can affect exchange rates? The exchange rate between two currencies fluctuates and is fundamentally influenced by supply and demand. Exchange rates can be affected by a number of factors such as interest rate expectations, inflation, macroeconomic events, investors' appetite for risk. Taking movements between the euro and sterling as an example, let's look at the effect of interest rate expectations. On 3rd of March 2011, the European Central Bank signalled that they would increase interest rates at their next meeting in April. The markets anticipated an interest rate rise in the Eurozone and the euro appreciated in value against sterling. This upward movement in the value of the euro against sterling can be seen in the chart. But why did the euro strengthen? Well, demand for the euro grew as investors increased their euro balances because they expected to earn a higher rate of interest once the euro base rate had changed. More information on the factors that affect exchange rates can be found in our video, I Want to Buy a House in Another Currency.